Right away, you notice that both of those rates are considerably lower than the highest federal tax bracket of 33%. The reality is, once your business is earning up north of $1 million, RSPs, TFSAs, Roth IRAs, 401ks are not going to be sufficient. Regular business expenses here and there, even the strategic ones for content creators, aren't going to be sufficient. Effective tax planning is now going to be based on entity structuring. And to sum it up, it becomes a game of hot potato. And the main goal is, how much income can we minimize from hitting us on a personal tax level? The reality on both the Canadian and US side, our tax brackets at a personal level are progressive, which means that they go up. For both countries, they can go north of 30%. Sometimes you can see it go north of 50% when we combine the federal rates with their provincial or state tax rate counterparts. Enter corporations. Corporations are tax deferring tools. Yes, you still pay tax within the corporations, but they tend to be flat one-time rates. Now, why tell you when I can show you? Let's demonstrate real quick. A Canadian individual in Ontario is subject to these tax brackets. They go up real high, especially once you're making over 250K. Same situation occurs if I take an American, right? So right here I have USA filtered, just taking federal. These go up all the way to 37%, and these are strictly federal. Just to keep it simple, if I go back to Canada and I want to add Ontario, for example, these are going to be the additional rates based on the income that they're making. So you would combine the federal rates I showed before plus these. Long story short, it ends up being a lot. If you're a creator or business owner and your net income is reaching that million or $500,000 area and up, you want to begin building effective entity structures which are going to be centered around corporations. If you look at a corporate tax rate in Canada, your first $500,000, strictly looking federally, is going to be 9%. Now, if you add a province and we specify that it's in Ontario, there's an additional provincial tax added to it, which is 3.2, which bumps it up to 12.20%. Right away, you notice that both of those rates are considerably lower than the highest federal tax bracket of 33%. You clearly see the arbitrage potential where you're at 15% personally versus 12% at a corporate tax level. And you want to be able to tell yourself, I only want the exact amount of income I need for either living expenses, tax deferred accounts like RSP room, TFSAs, like those depend on having earned income. So you do want to pay yourself a certain amount to increase those rooms, you know, bank income proof for a home or a mortgage, etc. That's when you really want to pay yourself and have it hit the personal tax bracket. You want to keep as minimal of an amount of money hitting you personally. And the way you do that is through corporations. It's the same on the US side. If I just toggle this and select the right state. For those who are stopping by for the first time, my name is Ronnie Fogain. I'm a CPA licensed in the States and in Canada, and I love educating and helping content creators across both jurisdictions with effective tax planning to maximize their wealth. I'll see y'all in the next video.